Good afternoon, everyone. I welcome you to today's webinar on clause 44 of Form 3CD from GST perspective. As you know that from this year onwards, the new form has been applicable, wherein we have to give the breakup of the expenditure on which how much is GST is deducted, from which person it is taken, and we have an excellent speaker here, Hitesh Jain here, to enable us, who is an expert in GST, to educate and guide us how to fill up this form. And over to TND, sir.
Yeah. Thank you, sir. CA Hitesh Jain completed a commerce graduation from Bhadruka College of Commerce, Hyderabad, and Usmania University. Fellow member of ICAI, qualified in November 2012. Completed certificate course on service tax in the year 2014, conducted by International Chamber of Indirect Tax Professionals, Chennai. Completed certificate course on GST in the year 2021, conducted by the GST and Indirect Tax Committee of ICAI, New Delhi. He is partner of Sanjeev Shah and Associate, Chartered Accountant, and heading its Hyderabad branch. Faculty for certificate course on GST by the GST and Indirect Tax Committee of ICAI, New Delhi. Contributed to the practical FAQs on input tax credit, released in July 2021 by the GST and Indirect Tax Committee of ICAI, New Delhi. Contributed to the handbook of accounts and records under GST, released in August 2020 and revised in June 2022 by the GST and Indirect Tax Committee of ICAI, New Delhi. Acted as the reviver of the handbook on the job work under GST, released in May 2020 by the GST and Indirect Tax Committee of ICAI, New Delhi. So is the member of FTCCI co-chair to the GST and Customs Committee, CAP TBA Treasurer, AIFTP, CGPI, RGA, Youth Wing of JITO, JITO Professional Forum, GC member, and Rotary Club of Hyderabad, enrolled Treasurer. With this brief introduction, I request Mr. Hitesh Jain to take over the proceedings.
Thank you. Thank you, sir. Thank you, Secretary, sir. A warm good afternoon. Is it visible?
Yeah, it is okay.
Right, sir. So thank you, Reddy sir, for a brief introduction. I think it was not required as I'm part of the family. So again, I thank you very much. Now we'll just go straight into the subject today. It is linked to clause 44 of Form 3CD. Being a indirect tax professional, I'm not a person who knows income tax much, but still, if I go wrong anywhere, many senior members are there with us. They can help you over. So clause 44. Now, what is the background? Before going into the actual subject about what we have to report under this, we should know some background about this, why these things are happening now, why this much of compliance aspects are there in every kind of form in any law today. I was just going through some comments of the Prime Minister. Then I came across this. What he said. This was on the audit divas celebrated by C&AG in November 21. That is the first audit divas. These are the comments of the Prime Minister, where he says that history was written through stories, but in the 21st century, data is information. And in coming times, our history will be looked through and understood through using data. In the future, data will be dictating the history. So in the future, data will be dictating the history. With these departments, that is assessment, audit, anti-evasion, investigation, and intelligence. All the departments are using these kind of data. At this stage, we may think that this is only reporting aspect of the Form 3CD. But practically speaking, in the investigations, these aspects are being used against the SSC if they misdeclare the information. Now, what to report? This is point number 5 of the form 3CA, 3CB, where they ask you to declare the true and correct aspects of the form 3CD, subject to qualifications, if any. Now the word is correct. If I'm not right here, the senior members can correct me. But what I have observed is true and correct, because apart from the financials, the form 3CD, the onus lies on the professional as much as about the SSC. Now, this was the birth of the clause 44. This particular notification dated 20th July 2018, which was made effective from at that time from 20th of August 2018. So this notification, they have inserted this particular clause 44 in the form 3CD. So the birth took place in July 2018. So what are the timelines here? Friends, the background links here to the introduction of GST. It was introduced in July 17. Then it was mandated as part of 3CD in July 2018. That is somewhere around the audit period, which we regularly conduct the audit of our clients. At that time, it was introduced. Then due to the dispute or due to the protest of the industry, it was kept under abeyance by Circular 618 up to 2019 March. That was the initial discussion or initial decision by the government. Subsequently, it was again kept into abeyance up to March 2020. After that, our COVID-19 pandemic was there. Again, it was kept in the abeyance up to March 2020. So industry was predominantly not ready to give this kind of information to the department. Even today, we are skeptical in giving this kind of information, but we have no option. So this was kept into abeyance up to 31st March 2022. Then this abeyance was not continued, and we are required to report for the forms filed from 1st April 2022. This particular information has to be reported. So these are the timelines. Now, who should report? This is the basic question. Some are having doubts regarding, like a person who is registered under GST, unregistered under GST, or who is liable to register but has not registered voluntarily. There are various permutations, combinations. But in simple, if we see here, the SSC can be of two types, a registered SSC and an unregistered SSC. A registered person, even though he might not have any taxable supplies, he might be registered, maybe for e-way bill purpose or some other reasons best known to him. He may have partially taxable supplies and partially exempted supplies also, which is regularly observed in the books of accounts of our customers, or somebody who is having fully taxable outward supplies. So they take registrations. There are some cases where they don't take registration. In general, below the 20 lakhs limit, if aggregate turnover is there, then they don't take the registration, subject to some exceptions. No supply itself, totally under Schedule 3 of CGST Act, they don't take registration, or they are having purely exempted services under Section 23, they are having an exemption to not to register. So these are the kind of SSC when we see from the GST perspective. But when you come to income tax, they are not bothered about whether you are registered or unregistered under GST. In simple, if Form 3CD is applicable to you, then clause 44 also applies. Whether you are able to give data or not, that is a secondary question. But applicability in general will be applicable to all to whom Form 3CD is applicable. So if you are under tax audit, then you have to give this information. And as an auditor, you have to certify this particular information. So irrespective of the registration, we have to take care of this clause. Now, what to report? This is the crux of our discussion today. Friends, there is a what we call as interplay between income tax and GST. Something we call as expenditure may not be called as expenditure, or inward supply under GST also. So in general, income tax see everything with the angle of allowing deduction for the expenditure. It can be revenue expenditure, then capital expenditure, business expenditure, non-business expenditure. This is the terminology used in income tax, but in GST, we don't have this kind of expenditure terminology. We have something called as inward supply. Our discussion is only about what we are getting from our vendors, not what we are supplying. So the entire discussion, kindly keep it restricted to the what you receive as a customer from your vendors. So GST calls this particular activity as inward supply, where they say this is the definition actually of inward supply: receipt of goods or services or both, whether by purchase, acquisition, or any other means, with or without consideration. So GST looks at the particular supplies in the with the eyes of a good or a service or both, composite situations. But in income tax, you have terminology like revenue and capital expenditure. So this synchronization has to be done in the workings which you are going to prepare. Now this is the table which is being asked to be reported by the assessee and the professional through form 3CD. If you see the yellow marks which I have made, kindly concentrate properly on those particular words. This is the heading of clause 44. They say breakup of total expenditure. Now, what is this breakup? Breakup need not be your expense-wise details. Breakup, in a sense, is total expenditure has to be broken down into the following tables. They are just asking you to put the total expenditure and break it up into these columns. That is the intention of the particular heading. So they say breakup of total expenditure. Total expenditure is the word used, not breakup of expenditure. So just to take total expenditure and break it up into the following. Now, what has to be taken into these columns, we'll see in the subsequent slides. So the total amount of expenditure incurred during the year. This is the first column. Now regarding this column, we will discuss what it is. Total amount of expenditure incurred during the year. Predominantly or primarily, if anything is there for the purpose of business and profession, that only will be considered under the heading. Personal nature expenditure may not come because that is not allowed in both the laws. So in either expenditure inward supply for the furtherance of business or profession. In GST, we have this terminology, furtherance of business or profession. So for that purpose only, this particular information has to be reported. The structure of indirect tax legislation, that is GST, lies on the section 7, that is scope of supply. If anything passes the test of scope of supply, that only gets covered under indirect tax, that is GST. Scope of supply in general, for the furtherance of business, you have to do some supply, barter, exchange, sale, transfer, all those activities for the purpose of business or profession. You have to do that, and for a consideration, there has to be two parties, a supplier and a customer. After that, there are some exceptions where they allow specific activities to be kept out of the scope of supply. There are two aspects in there. The most important aspect comes from Schedule 3, no supply. We commonly call as supply which is not considered as a supply in GST, no supply. Commonly, for our discussion purpose, kindly keep it, kindly understand no supply means Schedule 3. There is one more clause in scope of supply where the state government, central government, or local authorities are acting as public authorities. In those situations also, they are kept outside the scope of supply. Example, a very common example, GHMC is levying you property tax. That is outside the scope of supply through section 7. There is a separate entry and separate notification is also there for that exclusion. So Schedule 3 and public authorities activities by the government, they are outside the scope of supply. So what is not there in GST, in my view, should not be reported in this also. And there has to be a supplier. It cannot be notional entries. A supply has to be there. And some are having this view that if ITC is there, then I will put that particular entry in this particular column. I'll not put in this. Or if I'm taking ITC, then only it is registered. I don't keep record of unregistered ITC because I'm not eligible. You will put it in the unregistered column. This is wrong declaration. So availment of ITC is not at all the criteria for reporting these columns. Then what is expenditure? We were discussing business expenditure, non-business expenditure, revenue and capital expenditure. Now revenue and capital both has to be considered in this table. It is not only debit side of profit and loss account. It is addition to the fixed assets also that has to be considered here. Revenue as well as capital expenditure both together will go in the clause 44 reporting. The common exclusions are personal items, like some people, they put entire family is going for a tour. The assessee will put entire expenditure as business expenditure. These kind of things are not allowed in GST as well as income tax. But if you are taking any chance, but there is cross reporting aspect also here. So be very careful. Schedule 3, salary. Salary being paid to your employees, directors, all these activities are part of Schedule 3. It should not be reported in this particular table. Land and building, sale of land, sale of building, not under construction building, only sale of building, a property, that is also outside the scope of the reporting because it is not part of scope of supply itself. Then opening stock. Opening stock will be generally a notional entry. There is no supplier involved as such in that particular year. You would have received in previous year, it will be reported in purchase. Purchase anyhow will get covered under this particular table. So no opening stock will come. Notional entries like depreciation, amortization, provisions, bad debts, these are all notional entries. They are not required to be covered under this table. So in simple terms, if you see the source of this particular column number 2, you have to go to debit side of profit and loss account and additions to fixed assets. So both these things has to be clubbed and reported in the table. So with effect from 1st April 2022. Now, as far as I know, if a form 3CD is uploaded after 31/3/2022, then this has to be reported. Which year it is, I don't know. It is not specific to assessment year according to me, because the words used in the regular abeyance notification is they accept a date as a cutoff date for not reporting. So it is not linked to assessment year. If you are uploading any old 3CDs now, then also it will become applicable. Now, what we have seen was column number 2. That is total expenditure of the particular assessee. Now, that total expenditure has to be reported into these more 4-5 columns. Now, the next 2 steps are checking whether this total expenditure is for registered persons or unregistered persons. If it is for registered persons, then you have to go to the following. Now we'll discuss about all our expenditure which are linked to registered parties. You are maintaining the record or not, that is a secondary issue, but for the purpose of academic discussion, we have to always understand that the department thinks that we maintain data, so they want us to report. Now, see how it is vaguely drafted actually. Total amount of expenditure incurred, then the breakup is relating to goods or services exempt from GST, relating to entities falling under composition, other registered entities. Then they say total payment to the registered entities. This is a flaw. I feel they should have just given total of the columns actually, but they have written it as total payment. Then entities not registered. So in this way, we have to break the data. This total payment we will see in the respective slide when it comes. So now the next thing which we have to discuss is goods or services exempt from GST. Now what is this exemption? Section 2, subsection 47 under CGST Act discusses about exempt supply. There are three components to that. They say goods or services or both, which are nil rated, which are wholly exempted, and includes non-taxable supply. These are the three aspects. So what we have discussed about Schedule 3, salary, land, building, all those things are not part of exempt supply, hence not to be reported. So only exempt supply will come in this column. Now what is this? One by one we'll see. The first aspect was nil rated supply. Friends, everybody thinks that exempt and nil rated are one and the same. They are not. Exempt means under section level, it will be wholly exempted. That is the intention of exempted goods or services. In nil rated, they will specify in the notification as nil rate. That is the difference between nil rated and exempted. Hence, a separate terminology has been identified by the persons who have drafted the law. So everybody thinks like this food products or loose rice, it is nil rated. It is not nil rated, it is exempted. And for your information, there are no notifications which says any good is nil rated as on date. There are only 3 services which are linked to leasing, which are covered under nil rated supplies. So that only will get covered under nil rate. But for our calculation for this table, both will be clubbed. So we need not worry. Even in the annual returns in GST, they put it together under one table. So they don't want the particular SSC to get confused here. But as an student of the law, both the terms are different. They are not same. So supply, which is taxable at a nil rate by a notification, will be covered under exempt supply. Supply, which is wholly exempted by a notification, also will be covered under exempt supply. So 2 aspects are covered. Now, recently, this particular food products were covered under taxability. In some situations, they are not taxable as well. So that situations we have to be careful. We have to bifurcate them. SSCs are not well versed with the new rules. So they may be exempted, they may not be exempted as well. Now the third aspect in the exempt supply category, supply which is not leviable to tax. There are only 2 items which are covered, which are through section 9, they are being derived here. Alcoholic liquor for human consumption. This is non-taxable supply. Petroleum, crude, high-speed, diesel, oil, motor spirit, natural gas, and ATF. These are also non-taxable supply. So, petrol expenses in your profit and loss account will be here. They have to be covered under this exempt category. Intention is to be covered under exempt category, not unregistered. Generally, they will also, even petrol pumps have registrations for the purpose of oil. They have registrations also. So we have to be, this is a very common entry which we'll get here. So all 3 aspects are covered: nil rated, wholly exempted, and non-taxable. These are the coverage under exempt supply. So which will go under the second column. I am registered, then I have to see the category of exemption. If I am not registered, directly I'll go to the last column. So if registered, then report under exempt or non-exempt or other categories. Now what happens, you have to, since I am taking a GST perspective, I see everything with the eyes of good or services or both, not expenditure. But you are required to report expenditure. So we are trying to synchronize here. So what you have to see in exempt category, goods or services, both will be covered. Nil rated, wholly exempted, and non-taxable, all 3 will be covered. There will not be any GST in the invoices. There will not be invoice as well. They cannot issue tax invoice. They will issue bill of supply. No ITC will be there because no GST is there. And we can check the registration status online with the help of PAN number as well. I am aware that these things are not practical at this stage when you don't have much time to complete your audits, but these things can be advised to our customers, and at least for the next year, they will be ready with this kind of reporting. So I will also share one Excel template where how an inward supply register has to be maintained, which can help you in GST as well as income tax both. A comprehensive register I have prepared for the help of the professionals here. So I'll also share so that all these things can be consolidated and kept in one Excel sheet. Now, column 3 was about exempt supplies. So out of my total debit of the P&L and capital goods, I have to see how much has come from registered and how much has come from unregistered. After that, under registered category, I have to break it up into exempt supplies, then from composition dealers, then others category. So what is composition? Everybody know composition, 1.5 lakh or 50 lakhs, that limit is there. Goods and services, both are covered. Food business is also covered here. And bill of supply will be issued by the composition dealer. He cannot issue tax invoice. Composition dealer has to issue bill of invoice, bill of supply, and they cannot charge GST. This is the criteria based on which you will be able to differentiate. They cannot charge GST. They generally pay something like a turnover tax. So they cannot charge GST. Invoice will have GST number, but it will not have the GST mentioned separately in the invoice. Through this criteria only, you can sort your Excel sheet. And you cannot have a composition dealer who is from other state, because composition dealers are allowed to sell within the state only. So this is again a criteria to sort the composition supplies. Say example, somebody is telling on composition dealer, he'll give the invoice without GST, but he is putting the invoice number, GST number with 33 as the first 2 digits. 33 belongs to Tamil Nadu. So that is, as per law, he is not correct. Composition dealers can supply within the state only. They cannot do inter-state supplies. And we can check the status of the GST registration in GST website also. With the help of PAN or GST number, we can go and check the status, whether he is registered as a composition dealer or not. That also can be checked through gst.gov.in. So this was about column number 4. Now column number 5. So this becomes a residual category within the registered inward supplies. So anything other than exempt means taxable items will get covered here, and which are not from composition dealers will get covered here. It can also have casual taxable person suppliers, non-resident taxable persons also, and regular registration persons also. So any supplier who is not a composition dealer and is not giving you exempt supplies has to be reported under column number 5. This is pretty simple. Friends, as in the beginning I told, we need not go into the expense-wise breakup. Hence, I am not discussing about one expenditure. They ask you breakup of total expenditure. So what you have to do is you have to just report the total figures with broken down, which are broken down into respective columns. Now the column number 6, the one which I told is not properly drafted. They use the word total payment to registered parties, but we need not have payment in that particular column. Even ICAI in its guidance note has also confirmed this, that this has to be harmoniously interpreted and consider it as a total expenditure only. It is not total payment. And I got it confirmed with the income tax utility also. In utility, they add all 3 columns automatically. So exempt supplies, composition supplies, and other supplies, which are from registered parties, will be added up and filled in the column number 6, which are auto calculated by the utility of income tax department. So there is no concept of total payment here. Initially, people were also thinking whether this payment will be linked to our 180 days calculation under GST, because you are required to pay to the vendors within 180 days. So people were linking this to this particular payment, but I don't think that is possible, because we don't give party-wise details. We are only giving, or we are not giving head-wise details. We are only giving GSTN-wise or PAN-wise details. So that may not be the correct criteria. So what you have to do, add all three items and consider it as total expenditure. It is not total payment. Column number 7, the last residual category. In simple, initially when you sort your data, what you have to do, registered and unregistered, this bifurcation you have to do, and put everything under registered, which are with GST numbers. Which are not with GST numbers will directly go into this particular column. Here you don't need to go for exempt or composition, because that is not possible in this. It is only unregistered inward supplies which you have to consider. So it is residual category, just it's like a dustbin. Now in the income tax utility, surprisingly, what I have found is the column 1, that is the total of expenditure for the year, plus the registered inward supplies, plus the unregistered inward supplies are not being added up. I think they may introduce that feature in future, but we should report it as a whole. What the ITD, if how to report, I'll just show in the utility as well. Now this is the particular table in the income tax utility, where they are giving you add details option. So add details means serial number 1, 2, 3, 4, 5, 10 times, 100 times you can put your details. Here if you see my figures also, I have filled here 1 lakh. Then I have filled random figures, which is 43. See, this is a freezed field. So it means department is adding all these 3 and putting under total payment. Then I have filled 4,000. I have saved it. It got saved. Later on, any validation error may or may not come. But they are not having a totaling figure, a totaling aspect for this 43 and 4,000. They have kept it as an independent field only. Again, a totaling is not there. Just they are asking you to report the data. So what is the intention behind this? We will come to know after some kind of scrutiny or any investigation comes from the GST department, because we don't know in which way they want us to fill the last column. But if you ask me today, what we have to do, we have to report this 1 lakh, break into 43 and 57,000 here. So this is the data which you have to fill in the utility. Pretty simple. There is no much hue and cry in the utility, but hue and cry is there before filing the utility, which is a very big headache for us. Now, friends, this is there. Now, situations may come where practical situations, let us discuss now. You have data, you don't have data, or the SSC have data, they don't have data. If they have data, to what extent they have data? These are the 3 situations which can come. I have full data, I have partial data, I don't have data. Now, if I don't have data, say example, I am a doctor. I am not, excuse me. I am not registered itself under GST. But it is mandatory on me to fill this clause 44, because they say they don't give any specific exemption which is linked to registration in GST. It is applicable to all. What I have to do? I don't have that data maintained. Now, there are 2 aspects again. What is the responsibility of the SSC and the responsibility of the auditor, person who is signing the Form 3CD? The first field is linked to total expenditure incurred during the year. There is no way an auditor can say, I don't have total expenditure. It is with you. So this has to be reported with figures. 100% it has to be reported. Then as a doctor, I don't have the breakup. Then I may give a statement to the auditor that due to this particular issue, I'm unable to maintain the records and I may not be able to submit this information to the department. Then you have to go to point number 5 of your 3CA or 3CB. In that particular blanks, you have to fill the particular reasoning why you are qualifying that particular aspect. I have just to sample, I have drafted some disclaimers for all situations. You can edit, you can do as per your understanding. With limited knowledge of income tax, I have drafted this. We are not in a position to comment on the said clause 44 as the SSC have not submitted the breakup of the above said total expenditure for verification. Further, they have expressed their inability to maintain such bifurcation in their books of accounts due to the particular reason. My suggestion will be to take the reason as well from the SSC, because we are not in a position to put gray statements as on today, as we are too much under scrutiny as a professional. We should not take any responsibility of putting gray statements in the Form 3CA or 3CB. You should take the reason as well from the particular SSC. I am a doctor. I can state that since I am in the profession where I am not required to register under GST, I have thought it right to not to maintain any such data for my business. That is possible. It is a practical situation. Why I am telling this is because recently I faced one investigation for a client where they are relying on Form 3C A, 3CD and notes to accounts for building the case against the SSC with regard to stocks. So what I have found is they are unable to, the SSC is unable to give proper clarifications regarding stocks. So what they are taking the statements from the Form 3CB, 3CD, from these statements, they are confirming the situation. Why? Because you are a third party who is certifying this particular statement. I am not here to exaggerate the situation or put some bad thoughts in your mind, but be practical in writing these kind of disclaimers. This is the situation when there is no breakup available by the SSC. Now, assume there is partial breakup available with the SSC, but as a common statement, the total expenditure incurred during the year amounts to so and so has to be declared in that particular column, or at least in the Form 3CA or 3CB, because this you cannot bypass this particular statement. That first column is 100% with you. Otherwise, you cannot even sign the Form 3CD itself. So, if partial data is there, say composition data is not there or exempt data is not there, but registered unregistered data is there, which is very easy also. Based on PAN, we can do it. So they can give this kind of, this is only suggestive statements which can be amended as per your interpretations. So what I have thought right is SSC has confirmed that details are required under clause 44 are partially maintained by them for the inward supplies due to. Again, I want you to put a reason here that why he is not able to maintain full data. Hence, the figure reported under clause 44 are reasonably accurate to the extent of the data maintained and submitted to us for verification. I am not intending, as an auditor, I am not intending to take any responsibility of that partial information. When you have full breakup, this is the worst case scenario today. No SSC is able to give the exact details. So, but do you need to comment when somebody gives full breakup? I leave this thought to you. What you can decide whether you want to comment about anything. You are the best person to judge that. Now, these are the important practices which you have to follow. Form 3CA, 3CB, 3CD are reported on PAN basis. So you have to club the data of all your registrations, all your locations and fill it. I have seen a situation where a SSC is having 10 registrations, also having one more location but have not registered. My suggestion will be to add all. It is not GST number specific. It is PAN specific. So maintain data on PAN basis. Your spreadsheet you can accurately combine and you can fill the data in the particular fields. My suggestion will be for each registration, you can fill each row at least, so that this particular information submitted to income tax will also corroborate with the data of your annual return and reconciliation statements under GST. If possible, because the ITD utility is also giving you to add details. There are multiple rows you can add to that. It is up to you in which way you are required to report it. If accurately for future use, for future GST department audits, if you want to corroborate the information, my suggestion will be to put GST number wise breakup, so that at that time this can directly be calculated from that particular inward supply registers. And in general, when you have multiple GST numbers, separate 9C has to be filled and uploaded in the website. In that case, you have to also give the trial balance of the or location specific balance sheet, GSTN specific balance sheet, you have to upload in that particular statement. So at least that same statement can be used with all the particular registration and the working can be combined and prepared. Supplies between distinct persons. I am having two registration in Telangana and AP. Some supplies are between both the registrations, here to there to here. In PAN based statement, this will be netted off. There will not be a separate declaration between the distinct persons. So in my view, it can be netted off and a net figure can be shown by the SSC. Now, this is my suggestion. If you are able to or your client is able to maintain, then maintain a comprehensive inward supply register, which can be used under both the laws. As a firm, we have a practice of doing audit under GST and income tax at the same time. What we do is one person from indirect tax team, one person from direct tax team will go for the audit of the SSC. So what they do is they corroborate the data together. In one audit, they complete two audits actually, income tax as well as GST. So these kind of registers will be helpful for preparing. And this same register can also be used in filling this particular table as well under income tax. So that same data goes to all the particular government authorities or the departments. Now, I'll just share the particular Excel sheet also with you. This is a generally inward supply register, we call it. In GST, the platform of books of accounts is derived from excise regime actually. So we used to have REG 23, REG 22, those registers under excise law. The similar terminology or similar way of presentation is being used also in the GST regime. It is combination of VAT and excise and service tax, but to a great extent, the terminologies under law is derived from the excise regime. So we generally maintain something called as inward supply register. We maintain it GST number wise like this and period specific. Here branch name will be there. When you have multiple GST numbers, say, or under same GST number, you have 2-3 branches, then branch detail will be filled here. All invoice details, payment details. We keep payment details also in this particular note, so that 180 days calculation can be performed through this particular Excel sheet. Registered or unregistered. This particular field will be helpful in our table filling of clause 44. Registration location, GST number, nature of inward supply, input services, capital good. In GST, we have revenue and capital expenditure. Sorry, in income tax. In GST, we have input services, capital goods. What is capital good? What is something which is capitalized in the books of accounts? That is capital good. Input is receipt of goods. Input services is receipt of services. So we give this three breakup. The green, these items you have to fill in this particular columns here. Is it capitalized? Yes or no? Then taxable, exempted, nil rated, non-taxable or schedule 3, which we have discussed. Exempted, nil rated, non-taxable, these three will be filled in the table separately. Here GST number wise, we can also have one field of nature of GST registration. That is to put something like composition, non-composition, or CTPs, NRTPs, that we can put one more field in this particular like this. So you can give composition or otherwise in this particular field. Then you to corroborate with the profit and loss account or as debit side of the assets, fixed assets, you should take the references here. Accounting head or expense head. For detailed data maintenance, you can even have the nature of accounting entry. It is purchase or journal with internal reference numbers as well. HSN code, rate of tax, amounts with taxes, then eligibility. This particular fields will help in GST returns and annual returns. Then we can directly tag based on the sorting of the particular fields. We can directly tag all these from the in our income tax related form 3CD clause 44. So in this manner, at least a invert register, it helps both in GST audits, your department audits, everything it will help. I suggest to maintain this kind of invert register based on the nature of your customers. So this was about the best practices. So I think just one table we have to discuss. We have completed maybe within an hour itself. Now there are few comments. Yeah, I think no query is there in that particular chat box. Now I'll keep this floor open. Even chairman can join in.
Thank you, Hitesh. Before you take up any question and answer, first I regret for joining late.
It's okay, sir.
I was held up in some other,
right. Okay.
which was not in my control also. You have whatever 35-40 minutes presentation you have made. First, I appreciate your efforts in that. The GST is nearly out of box for majority of the tax practitioners, because we can't understand what is not required or what is required. Every day so many notifications follow. But leaving that apart, what has been asked specifically in clause 44 of form 3CD is very relevant for us, because as a professional chartered accountant, while doing tax audit, we have to attest it, we have to certify it. So
Correct.
few things I want to add to whatever as Hitesh has said. First thing, I would like to remind all the practitioners that the job of filling up of form 3CD is of the assessee, not of the auditor. So henceforth, before taking up assignment, take a management representation letter wherein you mention that whatever data furnished in form 3CD is furnished with due diligence by the management. And as auditor, our job is to verify that and comment on its trueness and correctness. See, if you see either form 3CA or 3CB, which is the main audit report, with relating to information with respect to whatever has been provided in form 3CD, it has been written that the information given in Form 3CD is true and correct. So without verifying and commenting appropriately, auditor will shoulder entire responsibility on himself, as if he is doing attestation to believe other person who is going through that report, that whatever is stated in Form 3CD is true and correct. So my humble request and advice will be to see that either don't take up tax audit assignment, or if you are taking up with respect to reporting in Form 3CD, more particularly with respect to clause 44, be careful and give your disclaimer. Nothing wrong in it, as Hitesh has already told, and I have discussed this aspect with him earlier, because several auditors in other venues, they have asked me, sir, we are not even giving this data relating to total expenditure. Why should we give? So it was very difficult for me to say that you are doing a big blunder. Simply I told, don't do it. You should give the total expenditure figure, because it is really available and which you can watch, verify, and also comment on it. With respect to breakup, really horrible. I don't know whatever Hitesh has told you to maintain inward supply for majority of the tax audits, whether it is possible or not, I don't know. Whether if it is possible, even if it is possible, whether they would be ready to maintain it, that is also difficult. More particularly, friends, while reporting total expenditure, please make note, even you qualify that. Qualify in the sense that you have taken total expenditure excluding non-supply items. Non-supply items like depreciation, bad debts written off, etc., which are not in the nature of supply. So in that sense, non-taxable items will also come, because I think Hitesh might have clarified you. This exempted category, which includes nil rated, zero rated, non-taxable also. So, but the first column is relating to all expenditures. So even I think, I may be wrong, you can rebut me. Even in my view, salary will also come that. But many of the other auditors, they are saying that salary, since non-taxable, not exigible to GST, it will not be part of that total expenditure. So after a lot of thinking, I thought we should go with the plain reading. Whatever expenditure prescribed in the P&L or 40A3, excluding non-supply items, we should give with a qualification that all non-taxable supplies and services relating to goods and services are included. And expenditure which are not in the nature of supply, inward supply, are not included. First thing. And second thing, regarding, there are certain expenditures like petrol fuel, which is not taxable. I don't know how people will analyze whether the dealer is a registered or unregistered, how bills will be maintained, how we will be able to know, particularly when you go to any fuel station, what sort of bill they are giving, whether that GST number is there in that electronic slip. We don't know, because majority of these things I have seen, because don't think that a petrol or fuel station, petrol bunk is not a registered dealer. They may be having different supplies which are covered by GST. So they may be having GST registration also. So it is a lot of difficult thing. In my view, this clause 44 is another audit in the main ambit of the tax audit. If you are ready to take chance risk, which I won't advise, then you can give the breakup, or breakup given by the assessee, you can watch for his authenticity. Otherwise, simply give disclaimer. Disclaimers are always good in case it is practically not feasible. Because after all, auditor is supposed to have data with him for verification. If the data is not available, what he can do? He has to give disclaimer. And as Hitesh has told, you have to give reason for disclaimer. That is important. Since SSC is not having software or system to support the for enlisting the data which is required to be given in the breakup is not available, this can't be furnished. As Hitesh has told you, I am putting Hitesh name again and again so that whatever relating to GST difficulties he has told are really genuine. Because as Hitesh has told you, that practically it is very difficult. Throw the responsibility on the auditee. Don't shoulder it by the auditor. First thing. And one more thing regarding multiple GST registrations, pan-wise data has to given. Hitesh, here I would like to clarify that there may be different auditors for different GST registration numbers.
Different auditors for different registration numbers under GST it is, not income tax.
So when an auditor is doing audit of same assessee having different registration number,
okay,
he has to give data only with respect to the books of accounts and records available with him, which is verifying.
Right.
So in that instance, it is not advisable to insist for assessee's entire PAN-based expenditure. And in that event also, give the disclaimer. Since you have audited these books relating to so-and-so GST number, you are restricting yourself in furnishing data relating to that particular GST number only.
In the case of multiple auditors.
Multiple auditors. Normally, there may be an auditor from Telangana can't be engaged by a person in AP, otherwise out-of-pocket expenses will be more than audit fees.
Actually, there is a cross link here. Income tax person will be submitting the data for the company as a whole. PAN-based tax audit will be there. In GST, we have independent auditors for each registrations.
Even in income tax audit also, there may be different auditors.
Is it possible?
Yes.
Okay.
Yes.
I'm not aware about income tax. I have not uploaded tax audit report.
No.
So I think you can correct me if I'm wrong.
And friends, where you have to put your disclaimer, that is also important. I don't think your income tax utility will allow you to give any disclaimer in that table.
Yes, it is not there.
So that's why in Form 3CA Class 3, which is relating to disclaimers or qualifications with respect to 3CD, you can give there. In Form 3CB Class 5 is there. There you can give your disclaimer. So with these few words, I appreciate and commend the efforts put in by Hitesh for this presentation relating to GST. Why we have chosen this particular topic, I think, is to understand how GST is important in reporting. In any way, it is not at all relevant for computing income.
Income tax.
So that is also out of our mind why this class has been put in tax audit report unnecessarily. So with these few words, I conclude my remarks. And if any questions are there, Hitesh is there to answer. If anything is asked to me, I will try to answer to the best of my abilities. Over to Hitesh to take up the questions.
Hello.
Yes, sir.
हनुमान
Yes, sir. Yes, sir.
जैसे रामदेव जी बहुत अच्छा प्रेजेंटेशन है, जैसा बहुत अच्छा प्रेजेंटेशन है. इसमें क्या है बोले तो और एक इम्पोर्टेंट थिंग है इंटरेस्ट ऑन लोन्स टेकिंग. That is also exempt. That is also out of the purview of GST.
Exempt.
That is what It is non.
Under the purview of the GST. Now
It is
we have to
non-taxable
mention-
item.
We have to mention the total expenditure debited to profit and loss.
Yes.
And after that exempted, and also there is confusion. Exempted turnover, alcohol is exempted turnover, but petrol is zero rated tax. It is not exempted. I think it is
Zero rated is not covered here, sir. Zero rated is a term used for exports.
Even for petrol also, I heard that it is zero rate.
No,
Petrol
sir.
is-
No, sir. No, no, no. That
It
is
is
wrong, sir.
non-taxable.
It is non-taxable supply.
No, if it called the GST Act, when passing the act, they made it zero rated because at any time they can make it bring it to GST. Of course, it is exempt now.
What is not leviable to GST
Yes.
can be covered and subsequently.
Yes, that is what I'm saying. Zero rate.
Zero rated is for exports only, sir. It is only for outward supply outside the taxable territory.
But in my opinion, I heard like that. Maybe I may be corrected. And one more thing is important thing is the disclaimers. Even if the client provides the information, how to verify them, and even after verification also how accurately we can verify them. So volume of information may not be possible to do that. It is better
Challenging.
to show,
I
it's
fully
better to
agree,
be-
sir. Challenging task it is.
it is better to disclaim.
Hanmantlu,
Better
Hanmantlu,
to declare disclaimer in Form 3C or 3CB, so that the context maybe it's in safe side. Otherwise, as many disclaimers, as much it will be protect us, the professionals. Otherwise, it will create a lot of problem. Especially GST, they want to see that every expenditure paid to the debited to the profit and loss account is covered by GST. It means the government wants that every expense debited to profit and loss account, there should be a recipient. The recipient is a GST receiver or not liable for registration or exempted, or the details the government wants to look at.
They are intending to collect the statistics for how much
Correlate
unorganized
with-
sector is
correlate
being
GST.
covered here.
Correlate GST records.
Yes.
This may be the reason. Of course, this is a highly burdensome the work given by the department. I think it's better to go for more disclaimer. Even if the client gives also, it is better.
It is
to protect
inaccurate. It is not
Yeah.
accurate. What client will give
better
will
to
not
protect
be
our
accurate.
skin first. We have to protect ourselves. And
Yes.
then, even if we rely on the statement given by the client, also we have to say that yes, this is the information provided by him, but we could not verify to the satisfaction, to our satisfaction. That we
no,
can
no, no,
mention.
no, no. Hanmantlu, please don't, while putting disclaimer or qualifying, don't say it is not possible.
It is,
Instead, rather you say with reason, since the SSC has not maintained, it is not visible. Not
even if
possible, not
maintained,
visible are
it's
different.
also,
Not verifiable means you are again taking shoulder on yourself. Not verifiable.
how it cannot happen? Even cash payments
Simply,
also.
that is what
10,000 we are doing like that.
simply say that SSC has not maintained data accordingly and has not furnished the breakup. Henceforth, not verifiable.
If the SSC gives information, what to do?
Gives information if it is, you have to verify.
That is the voluminous task.
Sir, let's Hanmantu sir, you can discuss this later on. You are a part of a GC member. Let's have others to see.
Okay.
You are well connected with Ramdev Bhutada. You are well connected with Hitesh. Please, sir, just try to understand. We cannot have a question for minutes together, sir. Please.
Okay.
Next question, please, sir.
If anybody is having any query, they can put in chat box or they can unmute and ask also.
The zero rated will also cover this export items as well as the SEZ items also, no, sir?
Yes, sir. Yes, sir.
Yeah. So that non-GST means we can put them in that, what you can say, petrol, diesel, and also alcohol. All these items will come under non-GST.
Yes, yes, yes,
Yeah.
yes. Ultimately, all these three are under the umbrella of exempt supply column only.
Yes, yes.
Nil rated and zero rated are not same.
Yeah,
Like,
yeah.
this is very important actually. Nil rated, exempt, and non-taxable are under one umbrella. Zero rated is directly into IGST law. It is only when you have export either in SEZ or outside the India, outside India.
Yes.
Any other questions? Members can unmute themselves and ask the question.
Good evening, Hitesh.
Yes.
Yes, sir. Good evening.
Yeah, in case of ineligible inputs, so we are putting the entire amount to the expenditure. In that case, we have to report the basic amount as an expenditure or entire amount.
In my view, income tax, they are asking total expenditure is the word there.
Okay,
So in my view, I will put it full amount there.
full amount. Okay, thank you.
See, it is all about interpreting those particular headings actually.
Mhm.
So when you see the headings, they are itself not very clear or they are not syncing with each other. They tell total payment at one place. They tell total expenditure. They ask breakup of total expenditure. So the heading itself are not very clear. But as since you will not be having any breakup of tax as well as total expenditure, in my view, better to put it together and submit it, because that will tally with the debit side of P&L as well. It can be reconciled easily.
Yes, yes, yes. Thank you.
Yeah.
There is a question in the chat box. GST paid on RCM expenses, whether to include in expenses or not, and electricity expense, in which column it has to be shown, registered or unregistered.
In my view, electricity will go under unregistered. They are not having registration. If I'm wrong, anybody can correct me. Where it is in chat box, I'm not able to see this.
In the chat box only.
In which column we have to report ESI payment, PF payment, professional tax, GST payment, income tax, stamping fees, partner interest, partner remuneration. Sir, what will be covered, and simple criteria will be if something is a supply, that only will be covered under our this particular table. This is my interpretation. When you go to income tax, you have total expenditure, you are checking that particular expenditure with registered party or unregistered party. So in my view, you have to just see registration status first, and directly this PF, ESI, they are all statutory payments. They cannot be covered under supply. Taxes and all cannot be covered. Even this stamping fee is not a tax. It is a fee. So what is a fee? Up in GST, you have exemption up to 5,000 rupees for these kind of payments. So that will be covered under exempt supply. Then partner interest, partner remuneration. Partner remuneration, these are considered as no supply mostly. So no supply means it is outside the supply itself. Where data is furnished by the client for the total is made to reconcile the same with figures reported in GST returns to ensure data integrity. Reconciliation with GST returns. Sir, my suggestion was to reconcile the books of accounts as such. GST returns will not have the purchase values. It will only have the ITC figures at most of the places. 2A will have some data, then again, it is all in a mess. My suggestion is to tally with the inward supplies, the register which I have shown, to the extent possible, to the extent you are able to maintain. GST paid on RCM expenses, whether to include in expense or not. RCM expenses are part of expenses actually. That is first. Number two, whether they are from registered or unregistered. Number two, if registered, you will cover under the others category. If unregistered RCM, anything like in construction industry, you have unregistered parties reverse charge, it will go under unregistered category.
No. Here the question is whether GST will be part of expenditure for RCM.
Sorry, whether?
The question whether the GST paid under RCM will be part of expenditure or not.
Generally, the GST paid will be taken as an ITC in general. So when it is ITC, it will not be part of expenditure in accounting terms.
Yes.
So GST paid, no question of adding here. But in some cases where you call input as ineligible and you expense the amount, in that situation only, it will be added.
Any other questions? Or is
One small doubt is there. I think it may be important.
Yes,
The
sir.
parties, what they are doing, sir, when they purchase items, they are purchasing the items for their personal expenditure also. They are putting their GST number and they are giving them for the auditor as a purchase for the business. I advise them that don't take such invoices on your personal items. Only the relevant items for your business you can bring, like that I told them. So it is correct or right, sir?
Sir, there are two things here.
Yes, sir.
Furtherance of business is not there.
Okay.
When you have personal items and all, furtherance of business is not. I'm only talking academically, not practically.
Okay.
Furtherance of business is not there. It cannot be taken as an expenditure or as a capital within the books of accounts. That is first. If you, as an auditor, we are overlooking that and then we are wrong on that part at least. So when you certify some balance sheet, then you cannot contradict that particular area also. I think you are mute, sir. It is not. Sir, you are mute, sir. We are unable to hear.
Yeah, I'm sorry. Thing is, at the audit point, they will raise such a objections, no, sir. If you take it,
Obviously,
because,
in GST, it is more dangerous when
yes,
compared to
correct.
income tax.
Exactly. Yes.
Why? Because example, I'll give you. Even department has started contesting this air conditioners being used in showrooms or offices. They try to put it too deep as it is not in furtherance of your actual business activity.
Exactly. Exactly.
You can contest that as an SSC. You can contest, but it creates a litigation for the SSC.
Yes. Yes. Yes.
So GST it is more problematic nowadays.
Correct. After 3-4 years, if they come for audit, then it will become big amount. We will claim this as an input, and
is a
if they
regular
reject
practice.
it automatically it is burden for us. We need to pay it more tax.
Yes, it is a regular practice, sir. Actually.
Penalty and interest. Okay, sir. Thank you.
There is one question. I think, what is the stand on discount allowed and insurance?
Discount allowed. So, discount allowed will be for a reason actually. It is in the scope of supply. If you ask me, discount is actually a benefit which is being received. So when you are discount as an expense, if it is there, then it will be added in the P&L account debit side. There may be some opposite views as well, but in my view, better to add it.
And this one, in all expenses, GST paid on expenses is required to be included in expense amount as per ICAI guideline.
In all expenses, GST paid on expenses required to be included in the expense amount as per ICAI guideline. I need to check and answer this. I don't agree.
No, here, Hitesh, if you are claiming it as input credit, then it will not be part of expenditure.
That's what I am of that view.
No, it is not part of. Many
ICAI
people are
guidance
misunderstanding the guidance note suggestions, advisories. So one thing should be clear. Whatever total expenditure which has been referred to in the table in class 44 is with respect to the literal meaning it is giving. With respect to supplies covered under GST. What is supply? If it is non-supply item, for example, cash discount. Yes, somebody was asking regarding discounts. Discounts are also two types. Trade discounts, cash discounts. Trade discounts are always adjusted in purchase and sale figures. So whatever sale purchase are netted they will automatically net figure will be reflected in the total expenditure of purchases. Regarding discounts allowed, discount allowed is not expenditure with respect to GST for reporting purposes. So my view is that it is just like depreciation. It is
So it depends
sort
on
of
the nature of
incentive
discount.
given for prompt payment. That discount is a sort of incentive provided for prompt payment. It has nothing to do with the actual supply or expenditure incurred.
So it depends on the nature of discount actually, what kind of discount
yes.
you're giving.
Yes.
Somebody is asking royalty payment for mining, whether it is supply and to be reported. Sir, royalty payment of mining is covered under reverse charge as per the view of the department today. There are some Supreme Court cases going on in service tax, and in GST also it will continue. But as such, if you ask me from department point of view, it is a supply and it will be covered under reverse charge mechanism. So when it is under reverse charge, indirectly it is a supply as well. So same situation of reverse charge comes here. But when in your books of accounts, if you are not agreeing that it is under reverse charge and you are disputing the particular activity, assuming that this particular royalty is a kind of tax being levied by the state government, then the situation changes. Your books of account is telling a different story. In that situation, it will be outside supply. So what I mean to say is you have to see the any entry with two aspects, compliance or litigation. As a compliance person, it is under reverse charge. And under litigation, there are situations are different. So SSCs who are not paying that GST on royalty, they will not account it as a reverse charge item. They will call it as no supply only. So this, I think this ICI guidance note, Santoshi madam, I'll just check and I'll revert. Or we can discuss on call also, because I'm not sure whether this statement is there in guidance note or not.
Yeah, just giving a credit. Yeah, I have another small doubt. Because the rates have been similarly changed from, means you can say from reduction, the tax rate. For the civil construction, if you take, in the beginning, we used to charge 18%. But now in the middle, it happened that without taking the input, 5% we are paying. Now again, it is going to be amended that we can take input and as well as you can charge 18%. So the taking the tax rate and all those things, there is some confusion. Suppose if I got any act earlier, automatically amendment will be there, and I will not go according to that. And if you search in the Google, it will also will have some 2-3 tax rates. So it's a little bit confusion. Even if I contact the department people, they will also unable to take exactly, no, it's, I don't know, sir, like that. So how can I get it, sir? In fact, generally we are getting some confusion. Suppose if you take this construction field also, civil construction, can I charge 18% by taking input, or without taking input, can I charge 5%? It's a little bit confusion.
Sir,
So
construction itself is an ocean, sir.
Sir.
And
moreover, Hitesh, it is not relating to reporting in class 44.
Yes. It is not like that.
Relating to rate, that we can discuss later.
National issue.
If any other question is there, take up, then otherwise hand over to Hitesh.
Fine, sir, I think
yes. Thank you, Hitesh. I think with this we have come, we don't have any more questions, and we have come to the end of the session, which is proposing the vote of thanks. In fact, when the session was, suggested by our past president that clause 44 of Form 3CD, I said hardly it will be a 15-20 minutes matter, but it's 1.5 hours it has been taken. Okay, thank you, Hitesh, and our past president CA.Ramdev Bhutada for enlightening us and taking this session in detail. And Mr. Ramdev Bhutada's apology is accepted for being delayed in this program. Okay, sir, no problem. Next time we can be on time, sir. Thank you so much, and thank you everyone for participating in this and participating in this program. Thank you. Thank you.
Reddy garu, thank you.
Thank you very much.
Reddy garu, Hitesh sir, thank you.
Thank you, sir. Thank you.
Hitesh Bhutada, thank you, sir.
Thank you, sir. Srinath, sir.
Thank you, Hitesh Jain sir, and Ramadev sir, and Hitesh Mittal sir, and all participated. Thank you.
Excellent presentation, Ritesh.
బిబిన్ గారు ఒకటేమో అలా మిస్సెస్ పేరు మీద ఉంది, ఒకటేమో